In trading, knowledge without a plan is like having a map without knowing where you are. A strategy is what connects your analysis to consistent results. It's the backbone of every successful trader's journey. Without a clear and tested trading strategy, you're simply guessing, and guessing is the fastest way to lose in the markets. So in this video, we'll break down how to build a complete trading strategy step by step, how to backtest it, and how to actually use it in real trades. Let's start with the foundation. A strategy must have rules. Clear, specific, measurable rules that tell you when to enter, when to exit, and when to stay out. Most traders lose not because they lack knowledge, but because they trade based on emotion instead of structure. So the first step is to define your setup. What needs to happen before you even think about entering a trade? For example, your setup could be a moving average crossover, a trendline break, or a price action pattern like a double bottom. The key is to choose one simple and repeatable setup and master it before adding anything else. Once you have your setup, define your entry trigger. This is the exact signal that confirms your setup. It could be a candle close above a moving average, a breakout from a range, or a retest confirmation. Your goal here is to eliminate guessing. Every time your setup and trigger align, you execute. Every time they don't, you wait. Patience is what separates the disciplined trader from the impulsive one. Now, let's talk about exits. Many traders obsess over entries but forget that exits determine your profit or loss. Define two kinds of exits: your take profit and your stop loss. Your take profit is the level where you'll close the trade in profit. Your stop loss is where you'll cut the trade if it goes wrong. A good rule is to always aim for at least a 1-to-2 risk-to-reward ratio. That means for every dollar you risk, you aim to make 2. This ensures that even if you lose half your trades, you'll still be profitable over time. But a strategy isn't complete until it's tested. Backtesting is your way of seeing how your idea would have performed in the past. Open your chart, go back in time, and mark every place your setup and trigger appeared. Note whether the trade would have won or lost, and calculate your win rate, average reward, and drawdown. The goal isn't perfection, it's consistency. You want to see whether your system performs well across different market conditions, not just in one lucky streak. Once you've backtested, move to forward testing. That means applying the same rules on a demo account in real time. Don't rush this stage. The purpose is to build confidence in your system without risking money. Record each trade in a journal. Note your entry, exit, reason for entry, and the result. Over time, you'll start to notice patterns. Maybe your setup works best in trending markets, or maybe it fails in low-volume sessions. This feedback is gold. Use it to refine your strategy, not to chase perfection. Now, when it's time to go live, treat your trades as an experiment, not a gamble. Stick to your system. Avoid the temptation to jump from one strategy to another because of short-term results. Every professional trader understands that success comes from execution, not constant tweaking. A good strategy doesn't need to win all the time. It just needs to have a positive expectancy, meaning that over many trades, the average win is bigger than the average loss. One mistake most traders make is thinking more indicators mean more accuracy. In reality, too many indicators only create confusion. Keep your charts clean. If you can't explain your setup in one sentence, it's too complicated. Simplicity is power in trading. The markets reward clarity and punish noise. It's also crucial to align your strategy with your trading style. Are you a scalper who thrives on quick moves? A swing trader who prefers holding trades for days? Or a position trader who focuses on long-term trends? There's no single best style, only what fits your personality and schedule. Your strategy must match the time and patience you're willing to invest. Otherwise, you'll constantly break your own rules. And remember, no strategy wins forever. The market evolves. Your job as a trader is to adapt without losing your structure. Keep reviewing your performance every month. If your win rate drops or volatility changes, revisit your backtesting and update your plan. Adaptation is not abandoning your system, it's improving it through real-world feedback. Finally, the real secret isn't the setup or indicator, it's discipline. A disciplined trader with a simple plan will always outperform a smart trader with no rules. Stick to your rules, track your performance, and trust your process. That's how you turn a strategy from theory into profit. Now that you understand how to build, test, and execute a complete trading strategy, it's time to move to the one thing that makes or breaks traders: their mindset. This strategy works, but 95% of traders still fail because of psychology mistakes. I'll reveal in the next video.